Where do you guys see, if you had to look into your crystal ball, the Canadian cannabis landscape, where it'll be in the next 2 to 3 years? Hey everyone, brand new week. Good to see you. I'm Shad Dales. Welcome to our latest Trade to Black podcast. Hope you all had a great weekend. A lot of earnings last week, a few more companies this week. So we're going to dive into some of those new earnings reports and what these numbers mean as we bring in the gents. Anthony Varrell, hope you had a good weekend. Good to see you, sir.
How's it going? It was good. It rained the entire weekend, but aside from that, got some reading done.
No golf?
No
golf in
golf. I was
Florida?
planning on golfing both days, and it rained.
When's hurricane season start?
Hurricane season started. It's through the end of October, which with the warming ocean, it's probably not going to be that good of a hurricane season this year.
What's the craziest hurricane that you've had to that you've been a part of?
And by far, 1992 Hurricane Andrew, when I was 5.
What was that like? Do you remember?
Yeah, it was fucking crazy. It was really crazy. And then
Did you not evacuate? Did you not evacuate to like another county?
No, my parents' house was like solid concrete. Our area was fine, but I remember just sleeping in the middle of the night and just hearing like howling winds. I can still hear it, unlike anything I've ever heard before. And then waking up the next morning, and there was just shit everywhere.
Really?
There was like a couple of roofs that got blown off on my street. Like there were trees that were down. Our house was completely fine.
What was the sound like though?
It was like a freight train. It was like a
for how long?
All night.
Oof.
All night, like a freight train, just like a howling engine. But that was crazy. That was the worst hurricane. But then there was one in like 2004 or 2003.
Hurricane Hugo. Maybe
it wasn't Hugo. It was Wilma. We were out of school for 2.5 weeks.
Hurricane Hugo was a bad one too. That hit the Carolinas more than Florida.
Yeah, Wilma. It was either Wilma or Irene, Irma.
Irene was a bad one.
Yeah, we were literally out of school for 2.5 weeks. Like Weston was underwater.
Wow.
Cell phone towers were down. Power was out for like 6 days. It was pretty crazy.
And to think Hurricane Andrew, that was what?
Early
90s?
Andrew's 1992.
Because of that storm, we now have shows like Python Hunters.
Yeah.
Like that wasn't
the Miami Zoo. The Miami Zoo got like wrecked.
So
it was bad.
All those exotic animals into the Everglades, hence the reason why there's like a huge infestation of pythons everywhere now.
Yeah, I mean it's that, and it's just stupid people wanting these exotic pets and then having them and then letting them go. I mean, there's tons of invasive snakes, lizards, fish. Like we have lionfish that are a huge problem off the coast of Florida, and it's because people get them for saltwater fish tanks.
They caught the largest python on record in Florida a couple weeks ago. It was 20 freaking feet.
They eat alligators.
No thanks.
They eat alligators.
Ben, good to see you. How was your weekend?
Crazy.
Yeah, weekend was pretty good. Fortunately, no rain here. Very good weather. Actually, like this time of year on the downside of summer when it's getting like a degree cooler on average per week, and then into September, it's my favorite time of year. So hopefully we keep going with that.
Noticing it's getting in dark a little bit earlier now. I don't know if you noticed that last week or two.
Yeah. Now it's around 8 o'clock where I am, as opposed to like 9. But the temperature's getting that nice zone for a few weeks there. So we're almost there.
And we're 3 weeks away from NFL football season beginning. I can't wait.
3 weeks?
3 weeks?
Oh,
4 weeks. 3 weeks, 4 weeks.
No, we're 3 weeks.
Thursday, right. September 7th. So we're by this Thursday.
3.5 weeks. 4 weeks.
Yeah.
3.5 weeks. Yeah.
Yeah. Some interesting games this week. Deuce Vaughn, all 5'6" of them with the Cowboys opening weekend. He looked great.
Who?
Deuce Vaughn. He was undrafted. Played at Kansas State.
Is he running back?
Yeah. He's insane. Anyways, yeah, he's really good. All views of the Trade to Black podcast, the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or guests as investment advice. The views on this podcast are solely intended to be informational and are not investment advice. Okay, viewers, you probably are watching this saying we've had enough of weather talk. So let's begin. I know this is a company that a lot of our viewers have asked us to cover on. It involves Canadian company Sundial, which trades on the NASDAQ under the ticker symbol SNDL, which had earnings yesterday morning. So let's dive into those numbers. This is more an alcohol company versus a cannabis company, but obviously they do have some cannabis assets, but some numbers that were, I think at first looking attractive. Net revenue for the second quarter of 2023 was $244.5 million compared to $223 million corresponding period of 2022, which is an increase of 9.3%. Gross margins of $51.9 million in the second quarter compared to $43.1 million in the second quarter of 2022, and a net loss of $33.2 million for the quarter compared to $74 million net loss in second quarter of 2022. So, as I said off the top, a lot of people, they reach out to us to cover this company. We begin with you, Anthony. This company, not only for you, Anthony, but you, Ben, is truthfully not a company that's on your radar. So after running through their latest earnings, what did you think of them? And is this a company you think that you'll watch more closely?
So I thought the earnings report was good.
Okay.
That came out. I mean, I'm not going to scoff at a 240 million top line number. Granted, as you alluded to, it's heavily weighted towards alcohol, with 150 million being in the alcohol bucket and the remainder 90 and change being in the cannabis operations, split between cannabis retail and the cannabis operations business. But I kind of like to take a step back and just go over my overall findings.
Okay.
I mean, after diving into the company, there's a lot of things to like here. Granted, I think Sundial about 2 years ago was pretty much nothing, almost a defunct issuer. I think the management team has done a very good job with the Alcanna acquisition, with the Valens acquisition, and with the Spiritleaf Holdings acquisition. Spiritleaf Holdings bolstered their retail footprint in Canada. Valens is allowing them to bring down their costs quarter over quarter as they create efficiencies and vertically integrate their cannabis manufacturing and distribution in Canada, which is paying dividends. And the Alcanna acquisition brought that revenue onto the books, as well as gave them a very large retail footprint. And I'm assuming it's going to create efficiencies in their domestic distribution businesses in Canada as well. So I mean, all of those acquisitions, I would applaud the management team. They're building something that is a sustainable business. With that being said, it is primarily an alcohol company with a growing cannabis business. Alcohol companies trade on average of around 2 times revenue, 16 times EBITDA. You could argue that
that's important to understand.
Yeah, you could argue that from a valuation perspective, based on revenue, I mean, it is fair valued to an extent. Me personally, I don't invest in Canadian cannabis companies. I think we've seen what has happened. We've seen what's rolled out. I don't think the addressable market is there. And I'm curious to see where the ceiling is for this cannabis business, where the ceiling is for Sundial's domestic cannabis business. The Nova acquisition, it's going to close here within the next 2 weeks, and that's going to add more retail on. But is the Canadian market big enough to sustain Sundial's large retail footprint, High Tide's large retail footprint, Fire and Flower's retail footprint, which even though it is in receivership, where's that going to go? Who's going to absorb those stores? Is this sustainable? Unlike Canopy and Tilray, who have Canadian cannabis businesses that they've right-sized and are now making forays into the U.S. market via acquisition in the alcohol business. I would argue that I like the growth prospects for Tilray and Canopy more than I do for Sundial, even though it's been a tremendous growth story over the past 2 years with these acquisitions. So, I mean, while I do think there's merit here, I do commend the management team for what they've done. I don't know if it warrants being an investable business just from where I'm sitting at. I mean, I'm going to continue to watch it. I don't think it's compelling enough for me to deploy capital into, but there are some bright spots here, and it is a decent business that they've built so far. So, I mean, it's definitely on my radar, and I can appreciate what they're doing currently.
All right. That was well said. Ben, you have a lot of agreements on some of the stuff that Anthony has outlined.
Now, I know it might make for a more interesting show if we disagreed, but it's very hard for me to disagree with anything Anthony said there. They are mostly an alcohol company, liquor company based in with a lot of their operations in Alberta. About almost under 40% is actually cannabis based, and so it's mostly liquor sales, and that growth was 2%, so not quite as high growth as the cannabis business. But that being said, a lot to like about the report. Very good growth, 244 from 202 quarter over quarter, which is fantastic. Margin profile is going up, although margin percentage is probably still in the 20s, in the high 20s, which is lower than you would see in traditional cannabis company. But yeah, I mean, the numbers look good if you just look at it from a top line basis, right? And they almost look like Canadian's version of Tilray in a way, except that Tilray is more cannabis top heavy in terms of the revenue profile. They only had 32.5 million, or approximately 20% of the revenues were in the alcohol business, whereas Sundial's is a lot higher, and they're more U.S. centric. But a lot of comparables there. And I like the business. I like the business. It just, do you want to be more in alcohol? If you want more of an alcoholic play, I think Sundial is the play, is the equity to buy. But they do have that kicker with the cannabis, and I wonder if a higher percentage of cannabis beverages is going to be on the docket as they go forward. Right, I'll be looking to see what those sales look like in percentage of their actual liquor revenues. So I like it. But it's not a pure cannabis play, which is why traditionally I haven't really followed it as much as others.
Right. So when we look at this as being more of an alcohol company, I should say, we look at this as being something that is not trading at a discount. Am I understanding that correctly?
It's trading at a discount. It's just not grossly undervalued, like a lot of the sentiment that I've seen in the market. However, a couple other bright points: they have no debt, zero, which for me in this space is fantastic. They also have a healthy cash position. I think they have around, I think this was, don't quote me on this, it was about 182 million, 185 million in unrestricted cash, which is healthy as well. And they have the investment arm in Sunstream, which is a JV that they've created to deploy capital into the United States, which they have investments in Colombia Care, Jushi, AFC Gamma, Parallel, Ascend Wellness, as well as SkyMint. Some of those, I mean, I'd say Jushi and Columbia Care, I'd put them in the tier 2 operator landscape. AFC Gamma, I mean, they haven't done as well as like our friends at Polaris, IPR, or like a New Lake, but I mean, they have done some decent deals. I don't know if I would invest in them altogether. And then SkyMint, I'm actually personally invested in SkyMint through a deal with Merida Capital, which SkyMint's an absolute dumpster fire. Right now, they owe something like $100 million to their creditors. The whole thing is in receivership, and the assets are being auctioned off right now. That being said, as I alluded to with the Sundial kind of being the inverse of Canopy and Tilray, where Canopy and Tilray are focused on the U.S., I mean, Sundial obviously are looking at the U.S. seriously. They're putting their money where their mouth is. And I mean, it's pure speculation, but I would be willing to bet that at some point in time, they are planning to make a foray into the United States. And with that investment in Columbia Care, paired with the transaction being nullified with Cresco, there could be something there moving forward. Not in the short term, but long term. I mean, you could see some writing on the wall and draw some parallels.
Yeah, that's a good point too, because when you're invested in other companies, you've done their due diligence and you tend to know the managements. So this is probably not, they probably do not have cold conversations. They probably know most of these executives by hand or by name. So that's a very good point. Also hurting their prospects at the time too is that, like you said, that investment arm is going down with the sinking of equities in the U.S. So that's not a point that's really solid for the company right now, and to lose that investment cash. Although they do have a lot of they do have 754 million in unrestricted cash outstanding. So that's another good thing to like about this company is they are cashed up. and their net losses are decreasing and they're cashed up. So they have a huge like cash runway, working capital runway for a while. So they can just sit on their hands and they can wait for opportunities to happen. And they're in a good place there.
So takeaways here then. Do you guys like this company? Yes or no? Like I get the impression that you like it from an alcohol perspective, but versus cannabis, there's some concerns. Am I reading that correctly?
I mean, I like it. I was pleasantly surprised. I was
Okay.
pleasantly surprised to dive into the business. I think there is a lot here to like, but we mostly talk about investing in cannabis companies. And if I'm going to deploy capital, I can't make an argument to buy this over like a GTI, over a Trulieve, over a Verano, over a Curaleaf. That being said, it's not a knock on the business. I think that they have a pretty damn good business. If you like this company and it ticks the boxes off, it
Yeah.
ticks the boxes for what you think is investable. I think there's a lot to like here. Me personally, I would pass on this as it's heavily weighted in the Canadian market as far as their cannabis operations go. It's heavily weighted on alcohol revenue, which you could argue is good to a degree, as there's no ambiguity around there's no opacity around that industry. That revenue's there, and with their market share, they're probably going to keep it on the books, so that
Mm-hmm.
business unit can be used to keep the company afloat, as well as siphon off working capital for other business units. But I mean, it's for me, it's just I would have to say pass, with the caveat of yes, I do like it, and I think there's a lot to like here, and the management has done a very very good job
Yeah.
thus far with building the business.
Where do
Yeah,
you
I'm
guys
gonna echo that sentiment
go
too.
ahead, Ben?
I think if you're going to look at this as a cannabis company, which a lot of people still do, I would say look at your valuations more based on comps in the alcohol industry and also in a Canadian market. That's how I would go about this. And I don't have those comps offhand. I haven't done those calculations, so I don't know. But I would not purchase this stock thinking that it is a cannabis company and expecting that early stage growth profile that cannabis companies have generally had. Now, obviously, not in the near term. Growth is kind of stalled out on both sides of the border, but you just have to value it as a alcohol companies. Do your comps, and then act accordingly.
Great information. One last thing I'll ask both of you. Where do you guys see, if you had to look into your crystal ball, the Canadian cannabis landscape, where it'll be in the next 2 to 3 years? Any guesses? Any notable guesses?
I'll let you take that one first, Ben.
I think it's going to grow pretty steadily. I think, obviously, out of the gate, it was pretty poor. Run rates were only a billion in the first year, really, in cannabis sales, and that was under capacity in terms of the national footprint overall. It's increased. It's been steadily increasing over time, and I think we're up to close to about 4 billion nationally, which is still probably under its potential. But I think you're going to see like a low to mid single digits sort of increase over time, and it's becoming more stable, more predictable as the build out of retail has happened in Ontario, which was slow to begin, and it's
Mm-hmm.
happened throughout the country. So they're actually talking about even a saturation point in Ontario in terms of stores after being very
Yeah.
underutilized to begin. Now it's we're getting to an overcapacity situation. So I think you're just going to see low to single mid digit growth, if I had to guess, for the next foreseeable future. A nice, stable, predictable business, sort of going with other CPG companies like alcohol, although less mature.
Anthony?
Yeah, I think that's spot on. I think that I think the next 2 to 3 years, you see stabilization. You see single digit to low double digit growth across the board. But I mean, what I do think is I think you're going to see a common denominator between Sundial, Canopy, and Tilray. And in 2 to 3 years, they are all going to have operations in the United States. All of them via MSO acquisition. I would be willing to bet
Yes.
that with my bottom dollar in the next 2 to 3 years, that is a point of correlation between the three. All of them do.
And that is, I will have to say, that is one thing to like about this company, is that
Yeah.
their cash position, because it looks like they have enough capital to get into the U.S. when it is feasible
Yep.
from a legality standpoint. So that is good. If they only had, say, I don't know, like 100 million on the balance sheet in cash, and they're losing whatever $35 million a quarter, then you'd have to start to think about, a dilution event, taking on, debentures and getting into more debt. You don't have to think about that right now. That is sort of out of view. So we get something, who knows if there's a descheduling event in the US or whatever, and it becomes feasible to operate in the US, they can pivot and act and get something done. And they can get into the US pretty quickly, I think. Hopefully, it doesn't take 5 years.
So the plot then thickens then. So if I'm understanding this correctly, because of the conservative growth opportunities in Canada over the next short term, are you guys suggesting that maybe this isn't a company that you'd look at right now, but long term venturing into the US?
Oh, I mean, if I wake up tomorrow and they put out a press release saying they have a call option on Colombia Care or they've got a call option on Jushi, I'll buy the stock. I'll gladly buy the stock. I'm saying that it's not investable under my criteria as it stands today.
Okay.
That could change very quickly because they do have cash, they have zero debt, they have interest in the United States, and they've got a business in Canada that looks like it's a money making machine. Yes, my thesis on them would change overnight if they alluded to having a foothold on an asset in the United States.
So the infrastructure is there. If there is an announcement or a move into the US, you think this is a very viable company. Right now, it doesn't meet that thesis, but with the cash position that they have, and if they are working towards something, overnight it does.
Yeah, I would be a buyer.
Okay.
And I know in a very short term if they made some sort of move into the US, but I think it happens in the next 2 to 3 years regardless.
Yeah. Well,
depends on the timeline, because if it takes 3 or 4 years and they don't do anything from that cash position is probably going to be dwindled down to a large degree. They are a net capital flow losing company at the present time. So if it happened, if Cannabis got to scheduled, say, next year, in the first half of next year, they're in a very good position. If it takes 5 years, then they may not have that balance sheet to sustain that without doing something else. So
fair point.
You can't, you have to look at timelines here. And right now, until there's something more known, until they do like a canopy deal, like they did with Acreage or something like that, like, some call option event, then you have to assume that they're not going into the US at the present time.
Okay. Well, I'm sure some of our viewers will have some comments to see whether or not we're accurate with that. But at the end of the day, we'd love to get your feedback. Leave a comment below if there's anything that we're missing, if there's any questions you have pertaining to the company, any comments that you want to leave them below. Let us know what you think. I think this was actually very in-depth as far as, the company itself for you guys to provide this information. But yeah, I'm curious and encouraged to have everybody comment below and be anxious to see some of the feedback that we get. But as mentioned before, if there's any questions, we'll reach back out to you guys and get back to the people accordingly and help them out in any way we can. But again, not investment advice.
Yeah, absolutely. And I mean, it's on my watch list. I'll be closely watching the company for updates.
Yeah.
As their business evolves.
All right, gents. This is a great report. Check back with you later this week. Okay.
Awesome. Talk soon.
Take care.
Guys.
Hey, everyone. So what'd you think of the interview? Did you like what we asked? Is there any information you want to learn more of? Then leave a comment below and let us know what you think. As usual, share this video with your network, smash that like button, and most importantly, make sure to subscribe to our channel because we would not be here without you. Thanks for watching, everyone.